All right. Good day, everyone, wherever you are in the world. I want to say, hope we had a wonderful day today. Today is going to be a wonderful one because you are going to be introduced to the world of Forex. A lot of us have been yearning to know what Forex is all about. Some of us have been hearing what Forex is, but we don't really understand. Today, we are going to understand what Forex is. So I welcome us to today's pre-webinar, where I will be introducing us to Forex. I will be telling us why people love Forex and trade Forex. I'll be telling us who trades Forex, how to trade Forex if you are a busy person. I will also be telling us when to trade Forex, the best time to trade Forex, when not to trade Forex, rules guiding Forex, what is pips, leverage and spread, currencies. I'll also be telling us what is a Forex broker and how to choose a genuine broker and setting up account. And I believe we have our pen and our book with us so that we can jot points down. Don't be distracted. However, at the end of this webinar, I'm going to be sending a replay to every one of us so that we can watch it again and understand what Forex is. Before I move on, let me quickly introduce myself. My name is Mr. Shaolu Collins, the MD FXworld, a subsidiary company of Rollers Integrated Services. What we do in FXworld is to train people on Forex or on financial education and also to manage people's investment. And we've been doing that for some years, and we have been doing wonderfully well. Before I move on also, I would like to say that this free webinar is being powered by L'Oreal More. L'Oreal More is an affiliate company that brings suppliers to the buyers through their affiliate. It's an affiliate company that has been making affiliates rich in Nigeria. There are a lot of affiliates that have been making 500,000, 1 million naira weekly on L'Oreal More. So we want to say thank you so much to L'Oreal More for supporting this pre-webinar and for making sure that people are financially free. So if you want to know more about L'Oreal More, you can go on www.l'orealmore.com, LORIOMAWLL, l'orealmore.com. So quickly, without wasting much of our time, let me quickly introduce us to Forex. Forex is an acronym for foreign exchange. As we all know, an acronym is a word that is being formed from two or more words. So Forex is a combination of the FOR from foreign and the EX from the exchange. So what is foreign? Foreign is anything not made or produced within a locality. What is not produced within a country or is not produced within a particular place is called foreign. If you say a car is a foreign car, it means that that car is not produced in that country. And if you say a person is a foreigner, it means that that person is not born or was not born in that particular country. So foreign is something that is brought from or produced from outside. An exchange is an art of changing a thing for another thing. So in the context of Forex, in relation to currency, Forex is the buying and selling of currency at the same time. So it is buying and selling of currency. What it means is that when you buy Naira, when you exchange Naira to dollar, then you are into Forex. A lot of us have been doing that. we exchange money. We go to the bureau de change or the mullahs, and we exchange dollar. We give them dollar, they give us naira. We give them naira, they give us dollar. And we don't know that we are into Forex, or we are already performing Forex or trading Forex. So that is it. That's the physical form of Forex. So Forex is exchanging or changing a currency of a country to another currency of another currency of another country. So it is buying, like example, like I said earlier, on buying euro and selling dollar, or you are buying naira and selling dollar, or exchanging naira for dollar or euro to dollar. Okay. Why do people love and trade Forex? People trade Forex for so many reasons. A lot of people trade Forex for so many reasons. But number one reason is that you start Forex with a very low capital, a very minimal capital compared to other businesses. Forex nowadays, since the invention of internet, Forex has been so accessible, has been so easy, and we have brokers that allow traders to come on board with as low as $100. How many businesses will you do in Nigeria today that you will use $100 to start? So Forex allow you, or brokers now allow you, to trade with as low as $100. And again, there are some brokers that do allow you to trade with much lower capital, such as $10. The second reason is that people work without stress. You can work, you can trade at your home, you can trade while working, you can trade in a bus, in your car, you can trade while zipping cold drink, while lying on an hammock. You can also trade anywhere from the comfort of your home. So Forex allows you to trade without stress. All you need is just to start with a little amount of money, your computer, laptop, or smartphone, and an internet connection. Another reason is Forex market never sleeps. Forex market works 24 hours and 5.5 days a week. The activities on Forex market follows the sun around the world. However, you don't trade on Saturday and Sunday. Forex starts 11 p.m. on Sundays and ends 10 p.m. on Friday. And it means that you can trade anytime. You can trade in the morning, you can trade in the afternoon, you can trade in the evening. It allows you to trade any time of the day between Monday and Friday. Another reason, again, is long or short. Forex allows traders to trade in both ways. You can buy when it is going up, and you can sell currency when the value is going down. It is not just when it is going up that you can buy at any point. You can buy when it's going up and make money, and you can sell when it's going down and make money. And I would like to say this, that Forex is a game of projection. It's a game of projection. When you predict well, when you are able to analyze well, and if it is going up and you are able to buy, then you make money. If it is going down and you're able to sell, you make money. So Forex allows you to make money in both ways. Another reason why people trade Forex is Forex transaction is low cost. Forex transaction cost is very low. Most Forex account trades with low commission compared to other form of businesses. Even let's say stock exchange, the transaction cost in stock exchange is higher than that, far higher than that of Forex. Forex is just like 0.1% of under the normal market condition. And the transaction cost is what we call spread. We are going to be looking at spread as the study continues. I believe you are getting and you are flowing with me. If you are flowing, can I have a yes in the chat box? If you are flowing, can I have a yes in the chat box? Yes, thank you so much. I can see that. I can see that. Ayobami, I can see that. Thank you. Nwaka, I can see that. Femi, yes, I can see that. Tolani, I can see that. Okay, I can see that. I'm seeing that. I'm seeing that. So let us continue. I can see you guys are actually flowing with me. So the next reason, another reason why people trade Forex is that it has high liquidity. There is a lot of money in Forex. I didn't say this when I started. The daily turnover in Forex is over $5 trillion. That is the money that people use in exchange or for exchange is over $5 trillion. The money in the market is over $5 trillion per day, in a day, which means that there are a lot of money in the market for you to make money from. There are a lot of money for you to buy or sell from. So Forex liquidity is very, very high. And it means you can buy any form of currency. You can buy euro, you can buy Japanese yen, you can buy Switzerland francs. You can buy so many currency on Forex. Time is not a constraint also in Forex, so you can do anything you want to do in Forex. All right, that is very good. So the next thing is, who trades Forex? Who trades Forex? The government trade Forex. You would have been hearing Nigeria FX, Nigerian FX. Yeah, and sometimes goes low, sometimes it's high, sometimes. So the government of countries trade Forex. Central banks of countries, they put in their money, and they are the main player in Forex. They put in their money in Forex, they trade Forex, exchange their currency with or to another currency of a country, so that they exchange it. We are going to be looking at how it actually works during the technical and fundamental analysis by the time we start the main webinar in the next class. So commercial banks, all this, I don't want to mention their name, they use your savings, or they use some funds to trade Forex, and they make good money from it. They have traders that trade for them. Big companies also trade Forex. Fund managers, people that manage people's funds, they trade Forex. And hundreds of thousands of individuals like us trade Forex. You and I, we fall under that category of hundreds of thousands of individuals. So we trade Forex. And I would like to say this, we are just followers in Forex. We are not the big players. The big players are the government, the central banks, the commercial banks, the big companies, and even some fund managers. They are the big players. They are the ones that determine the trend. They are the ones that determine the way the currency is going, whether it is going to go up or it's going to go down. If a person or a country put $1 billion on a particular currency, it will affect the trend of that currency. So they are the ones that determine the movement, the trend. We are just following, and you have to get that one clear, that you are just following the trend. You are not the one deciding. All right, let's move to another subtopic, which says, how do busy people trade? How do you trade if you are a busy person? And this is for people that do go to work from 9 or 8 and come back by 4 o'clock. Is it good? Can you still trade Forex? A lot of people have been telling me, yeah, I'm so busy and I don't think I can trade Forex, because Forex, you need to stay on it for 24 hours. You need to do it. No. I'm also a very busy person. I have some other businesses that I do, and I trade Forex and I make good money from it. So I'm going to give you 2 different ways in which you can trade Forex. The first way is you can choose a platform that will allow you to follow top traders and copy their trades. Is that okay? If you know you are a busy person, though you need to understand Forex very well, there are some times that you just go to a platform that allows that. I'm going to be giving you the names of this platform. They allow you to follow. You just go to the leaderboards, you look at number 1 to number 5, you look at what they trade, and you copy their trade. However, they are going to be getting percentage on the profit you make when you copy their trade. And the second way of doing it is when you analyze in the morning. That's what I do most of the time. I analyze in the morning. After analyzing in the morning, I go to work, and during the main section between the London and the New York section, I go back to the market. That is between 2, 3, or 2, 3, 4. I go to the market, I reanalyze it, and I execute my trade. And I always make sure that I set my take profit and stop loss, so that if it goes in my favor, bam, I make my profit. And if it goes against me, the stop loss feature will take me out. I'm going to be talking about stop loss later on. Okay, when do you trade? Yes, you can trade 24 hours a day, 5 days a week, and it's always active for that 5 days and a half in a week, from Sunday night to Friday night. You can trade. And most importantly, you trade during sections as traders. And the reason is because during section, the trade is always volatile. The trade moves. The traders, what we call section. Section is a period where trader of a particular country go to a particular place called the trading center to trade. So when they go to that trading center to trade, you should know that the effect of their trading will be seen on the market, will be noticed on the market. So for London section, it is 7 GMT to 15 GMT, which is 8 a.m. Nigerian time to 4 p.m. Nigerian time. And we also have one of US section for US dollar. That one is 12 GMT to 20 GMT. GMT is +1 for Nigeria. So if you want to do it, just add 1 to the value and you'll be able to get the time in Nigeria. And we also have Australia time. It is 21 GMT to 5, which is 23 GMT to 7 GMT. Okay, so best time to trade. Yes, this is very important. There's no time you cannot trade as a trader. However, we are saying the best time you need to trade is Tuesday, Wednesday, and Friday morning, according to the research made by big traders in the market. The reason being that on Monday, the day is a fresh day. It's a day that traders just come into the market. They are analyzing the market, and most times they don't really execute trades in the market. The big players do not execute trades. Sunday, there is no trade. So Monday that they just resume, they don't really execute trade. But on Tuesday, they would have analyzed the market. So on Tuesday, they execute more trade. So the trade is more volatile. You know the direction on Tuesday. On Monday, the direction may not be clear. But on Tuesday, the direction will be clear. Wednesday, the direction will be clear. Friday morning, the direction, because they know that they are not going to go to the market on Saturday and Sunday. So they quickly execute market and trade on Friday morning. But it is advisable not to trade Friday afternoon, because a lot of them will be opting out of the market Friday afternoon. So it is always very good to know that immediately it is Friday afternoon, you start opting out from the market. Okay, when not to trade Forex, when you are not supposed to trade Forex, don't trade Forex during Asia section or overnight. The reason is the spread is always very high. And again, most of us would have been tired, and you might not be able to decide very well. So that's the reason why we said that. It's not that people don't trade during Asia session. People in Asia will trade during Asia session. But here in Nigeria, we always advise people not to trade in the night. When you are tired, you won't be able to think very well. And Forex requires you thinking very well. Don't trade at the release of news. This is under fundamental analysis. That some people are into that. They trade news. Don't just trade when a news comes out. When the farm payroll news comes out, when economical news comes out, immediately it comes out, don't just trade it. Is that okay? Don't trade. Allow that news to determine the trend before you go on Friday afternoon, or okay, you don't even trade on weekends. Don't trade on bank holidays. Don't trade when you are angry or you are frustrated. And at the end of December, don't trade. The reason why you don't trade end of December is because most companies will be opting out of the market, will be having their end of the year stuff. And because of that, the market may not be regular, may not be stable. So we advise people not to trade. It's not that you can't trade during this section, but however, we just advise people not to trade within these sections, Is that okay? During this period. All right. So the next thing is, okay. All right, rules. Okay, rules. These are rules that are very, very important. And I want you, please, they are very, very important. Number one, because everything I'm going to teaching you during the technical analysis will not make you rich if you do not follow these rules. Is that okay? It will not make you rich. You need to follow these rules critically so that you won't lose all your money and so that you'll be able to maximize the market when I start teaching you technical analysis, the patterns, the candlestick, and every other thing you need to know. Now, the rules. The first rule says, always analyze your market very well. Don't just go into the market using one strategy. We have so many strategies, at least three. Use at least three strategies. I'm going to be teaching you this strategy by the time we get to the main technical analysis or even the advanced class. So use trend line, indicators, candlestick shape, patterns. I'm going to be talking about this later. But make sure that you use trend line, indicator, candlestick shape, and pattern. And if there is a need, use your fundamental analysis with it. Some people will tell you, I don't like using indicators. And I always tell them, if you don't use the indicators, yes, you might decide not to use indicator, but you just be like a driver that doesn't have a fuel gauge indicator, that doesn't have a speedometer indicator working, that doesn't have so many indicators working in the car. So will he be enjoying the driving? No, it's not that he won't be able to drive, but he will not really be enjoying the driving. So the indicators help us to know when the market is volatile, help us to know the momentum rate, help us to know so many things. The indicator is not telling you, yes, move, buy, or do anything, but it is helping you, it is guiding you, it is giving you direction. So it is really, really very important for you to use indicators. I tell traders and anyone I train that they must use indicators. Always use stop loss. Some traders will tell you I don't use stop loss because if I use stop loss, it will just come, cut me off, and it will start going back. Please and please, my brother, my sister, as a big trader, as a good trader, as a professional, always set your stop loss. I'm going to be teaching you how you are going to be setting your stop loss during my practical class. Don't trade money you cannot afford to lose. If you trade with money you cannot afford to lose, you will trade with fear. So if it is 50,000 naira you can trade with it. That you know that if you lose it, you will not die. If it is 20,000 naira that you can trade with, and you know that if you lose it, you will not die, trade with it. It's not that you're going to lose the money. However, it will only help you to trade without fear. Okay, the next one is don't trade with fear or any form of anxiety. Don't trade with any form. When you are hungry, don't trade. When you are tired, don't trade. When you are afraid, don't trade. Don't trade with fear. Just go straight into the market. Trade with the money you can afford to lose. Trade when you are happy. Trade when you are okay psychologically. Don't use more than 5% of your capital when you are trading. Yes, I'm going to be explaining this more. Anytime you are trading, the investment you put into your trade should not be more than 5%. If you are good enough, you can use 10%. That is, if you have $100, then you should know that the money you should be risking is just $5. Is that okay? At worst, $10. The reason being that if you lose that $5, you can go back to the market and re-strategize with the $95. But if you lose all, you might not be able to go back to the market and reanalyze it. So it is very okay for you to use 5%. If you are good enough, you'll be able to use that 5% to make 10%, or that 5% to make another 5%. Is that okay? So that's how you keep rolling it, the money will become very big. But if you are losing so much of your money, then your capital will soon go up. Accept losses. Anytime you lose, don't be afraid. Losses should be part of every trader. If you don't want to lose, then don't go into Forex. You will surely lose in Forex, but your profit must be more than your losses in Forex. Always allow your profit to run. Some people don't allow their profit to run. Immediately they make $2, $3, $4, $5, they cut it off. And that is where they miss it. But when they are losing, they allow their losses to run. That is a very big mistake. So always allow your profit to run. Just analyze. When you analyze, you know where it's going to turn. So if you know what you are doing and you have profit, let the profit run. because you know what you are doing. Most people don't know what they are doing in Forex, and that's the reason why when they make $2, $3, $5, they quickly cut it off. So know what you are doing and allow your profit to run. The last thing which is very important is keep learning. Keep learning. Keep learning. Have a mentor. Don't just think that this training is what will make you good money. Yes, it will give you good money. You can start with it. The practical, the advanced class, yes, it will help you, but also learn, work with traders, relate with people, and before you know it, you will start making good money. All right, what is PIPS? What is PIPS? PIP is price interest point, which represents the smallest change in currency pair. Typically, it is 4th decimal point, although there are some brokers that quote using 5th decimal point. Now, when you say decimal point, it means that if you say 4 decimal point, it means there are 4 digits after the point. If you say 5th decimal point, it means there are 5th digits after the point. So for Euro against USD, if you look at it, you will see points and you see 1.2302. Is that okay? Which means that it is 4 digits. But there are some brokers that use 5. They will put something after these 2. Is that okay? That 2 is insignificant. So don't worry. Even if it is 5, focus on the 4th one. Is that okay? The movement from the 4th one to another number, the next number is what we call P. That is 1.2302 to 1.2303 is 1 P. Is that okay? 1.2302 to 1.2303 is 1 pip. However, a pip is 1 over 10,000. That is, it's not just going to be like that 1 pip per se. I'm still going to explain in the main practical class. It's going to be 0.0001 for US dollar. Any currency that includes US dollar is going to be 0.0001, but that's 1 pip. Yes, okay? Or 0.001 pip. Okay, if it is yen, it's going to be, yen is in 2 decimal points. Is that okay? So it is 1 over 100 of a yen, which means that it is going to be 0.01. 0.01. That's 1 pip. What is leverage? Leverage is the margin rate trading ratio that enables traders to borrow a certain amount of money that allows them to trade in much bigger deals. Now, it's just like you have $50 and you want to trade $50,000. Wow, this is a very good advantage in Forex. However, it is two-edged sword. It will help you to make good money, and it can make you to lose all your money within a twinkling of an eye. So you need to be very careful when you are using leverage. Leverage is in ratio. It will just write, it will be in form of 1:100. That is, if you have $50, if it is 1:100, that means that you'll be trading 5,000. The deal you'll be trading will be $5,000. If it is 1:1,000, that means that the deal you'll be trading will be 50,000. Is that okay? Okay, what is spread? What is spread? Spread is the commission the broker receive. Is that okay? Like if you go to the Bureau de Change, you want to change your dollar, someone send money to you from US and you want to change the dollar to Naira, you go to the Bureau de Change, the Mola, the Hausas, and you give them the money. The person buys it for 500 Naira. Is that okay? Another person will come and the Hausa will not sell it for 500 Naira. The Hausa will sell it for 550. So the Hausa have gotten how much? 20 Naira commission. That is the commission we are talking about here. That commission is what we call spread here. And it is the difference between the bid and the ask. What is bid? Bid is the price that a trader can sell the base currency, while the ask is the price they can buy the base currency. What is a base currency and what is a counter currency? Now, a base currency is the EUR, which is euro against US dollar here, this place. The base currency is the one on the left-hand side, which is euro, while the counter currency is the one on the right side, which is US dollar. One value of the base currency gives us the value of the exchange rate of the counter currency, which means that 1 euro will give us 1.1051 of US dollar. Is that okay? All right. So the next one is, what is currency? Currency is a system of money in general used in a particular country. It is a medium of exchange for goods and services, which is usually issued by the country, by the government of a country. For example, we have Naira, Nigerian Naira, Ghanaian cedis, United States dollar, Great Britain pound, Europe, euro, and so on. Is that okay? So we have minor and major currency. The major currency is the currency of a country with stable economic and political institution. This currency, the value of this currency for major currencies are stable. Is that okay? An example of these currencies are Euro, US dollar, Great Britain pounds, Canadian dollar, Japanese yen, New Zealand dollar. You realize that these currencies are, their economy are stable, their political institution is also stable. However, minor currency are the opposite of major currency. You understand what I mean? This economy, the political institutions are not stable. Example, Nigeria, Naira, Ghana, CD, South Africa, Rand, and so many others. So currency pair. Forex is traded in currency pairs. That is, you trade two currencies together at the same time. You buy and sell at the same time. Example, you have Euro against US dollar, Great Britain pounds against US dollar against Naira, New Zealand dollar against US dollar against Japanese yen. Now we go to major pair. Major pair is the economy, like I said, just like when you are trading major currencies together. Is that okay? And they have more liquid. They have more liquid, and the broker use lower spread for it. So the commission the broker collect on when you are trading major pair is very, very minimal. So you have Euro against US dollar, Great Britain pounds against US dollar against Swiss franc, Euro against Japanese yen, US dollar against Japanese yen, and others. Is that okay? There are other major pair. We also have what we call crosses pair. Crosses pair are any currency pair that doesn't feature US dollar. Like if you look at this side, you see that US dollar is not there. Great Britain pounds against Japanese yen, Australian dollar against Japanese yen. They are also like major currencies. They are major currencies. And when you talk about exotic pair is when you are trading either US dollar or euro against minor currencies. We already know what minor currencies are. Is that okay? These pairs are less traded and they are costly to buy or sell. Their spread is very high, but it gives you money. And let me tell you the reason why it gives you money. If a person purchased Nigerian Naira now, the person is in money. If you have purchased it since 10 years ago, you are in money. Just say sell. That Naira is going to be going down. You just see that you are making money. And that's the reason why one of our leaders in Forex, George Soros, gained $800 million profit from selling Taipei in 1997. Because he knows that it's going to be falling, and it was falling because the economy of that country is not stable. So what is Forex broker? Forex broker is also known as currency trading broker. They are the intermediary between we that are trading and the market. And they are the one that receive commission on what we trade. So what do you need to know if you want to pick or choose a genuine broker? Number one, you have to check out whether that broker is affiliated to a financial body of that country, whether it is regulated. The regulatory compliance, you have to check it. If you want to pick, because there are a lot of scammers, there are some brokers that they just want to pick your money. They want you to lose your money. So you need to be very careful. Is that okay? The second thing is the account feature. Which account features do they have? Micro account, mini account, standard account. What kind of account features do they run? Is that okay? The currency pair they offer you, do they offer you major pairs? Do they offer you crosses? Do they offer you exotic pairs? Look at that. Their customer service. If you have issue, are they the kind of companies that you will have to call and call before they will answer you? The trading platform is a trading platform. Okay, is it attractive? Is it well-to-do? Is it welcoming you? Is it a trading platform that you can easily execute trade? Then, if it is, then you can go for it. The payment system, do they allow bank transfer? Do they allow ATM, MasterCard? Is it only paper they accept? If it is only paper, then you know you should have issue in Nigeria. Is that okay? If they don't allow bank transfer, you should know there is going to be an issue. And again, the report from traders, testimonial. I'm going to be giving you some like this, IQ option, like Forex, FSCM, Ava Trade, and so on. And the next, now you set up. Now, the way you set up is you click on the link sent to you. And after that, click on Got It. Make sure you click on Got It. Put in your information here. After putting your information, then you download. Make sure that you do like that. A link will be sent to you and you will download. So thank you so much. You will join me at the webinar where I'm going to be training you the introduction to trading platform, fundamental analysis, candlestick shape, which are going to be dodgy, hammer, railway track, spinning top, hanging man, and many more. There are a lot of things I'm going to be taking you on that. I'm going to be taking on horizontal line, trend line, introduction to indicators, and what is Forex. The reason why I need to teach you Forex is because we are making good money in Forex, and a lot of people don't even know that you can make money while trading Forex. So I'm going to be taking you on how you can trade Forex. Is that okay? So let's see it at the webinar, which is going to be coming up very soon. So thank you so much for coming. Thank you, Loromo, for giving us this opportunity to trade. I really appreciate everyone for coming. If you have any question, you can drop that question. Is that okay? Do we have any question in the house? Do we have any question in the house? If you have any question, we can drop that question. And if what I have given to you today is self-explanatory, it's well-informed, then can you say yes? Can you say yes? If it is well-explanatory, can you say yes? Okay. Wow, thank you so much. Thank you so much, Ayobami. I can see you. I can see you. I can see you. I really appreciate you. Thank you so much. You said it is perfect. Okay. Yes, I really love your class. Thank you so much, my brother. Thank you so much, everyone. Akin, I can see you. Okay, Fola, I can see you. Thank you so much. Thank you so much. Thank you so much. Thank you so much. So we're going to be running this up. And at the end of the main thing, then we go to the main webinar. So we're going to be starting the main webinar anytime from tomorrow. So thank you so much, everyone. I love you guys, and I check out now.